Fellow Kenyans, if I told you that there was an easier way to rob a bank, a way that is more effective than wielding a gun and wearing a mask in a banking room, would you believe me? As you will find out, most of the banks that have collapsed in Kenya, it's because of the greed of the founders. It's the founders who made the banks with the sole aim of looting the same banks, but with your deposits. This is the story of financial gangsters. From bank founders who plunder depositors' funds to bank managers who facilitate creative accounting to cover such fraud. From politicians who use such banks to launder money and central bank officials who are compromised. Welcome to today's episodes on financial crimes. We look at top 5 of the bank scandals in Kenya. My name is Jeff Kafka and I'll be your host. Trade Bank was founded by Al-Nur Qassam in 1982. I know most of you might not have been born then, but I'll take you back to that year. Kenya was firmly under the rule of KANU and President Moi, and around President Moi were so many influential politicians, and one of the most influential politicians then was one Nicholas Biwott. It was this man, Nicholas Biwott, that helped Al-Nur Qassam start the bank in 1982 with the sole aim of facilitating proceeds from corruption as well as financing projects by the elite political class of the day. But this bank came into prominence in 1986 when Kenya undertook a multi-million project to create the Turkwel Hydro Generating Dam. This is a dam that still exists in Kerio Valley, and as it was being constructed, the construction firm that was to undertake the project was handpicked by Mr. Biwott. And this could only mean one thing, that the quote or the costs that the project would be quoted had to be exaggerated. The project was 3 times higher than it should have cost, meaning that 2/3 of the money was profit for Mr. Biwott and for his political associates. At that time, there was a young man working at this bank, Solomon Mudhamia. I want you to remember that name. He was a fresh graduate, around 27 years of age, and he was working in the Forex trade department. So, Al-Nur Qassam saw the potential in this young man, and he introduced this man to Biwott. And Biwott instructed this man to now launder his money, be transacting his money as if it is foreign exchange to foreign accounts. Solomon did not know that the billions he was going to handle from 1986 to around 1991 were illegal proceeds from the Turkwel Dam project. Meanwhile, Mr. Qassam had overwhelming influence in the operations of Trade Bank. He used that power to enjoy unauthorized credit. He obtained colossal amounts of money by faking documents to obtain pre-shipment finance for fictitious export, and using Trade Bank, he defrauded CBK close to 2 billion shillings in the 1980s. At the same time, Biwott defrauded Kenyans billions of shillings that could not be counted. Number 4, Europa Bank. Europa Bank was started in 1993. But to understand Europa Bank, I'll take you back to 1982 when Trade Bank was started, and I told you there was a guy working there in the Forex department called Solomon Mudhamia. So Solomon Mudhamia was the guy that was responsible for laundering Biwott's money. But he was a clever guy. He was a Meru Kikuyu guy, because for every million that he helped Biwott launder, he schemed some for himself. At the end of his career at Trade Bank, he had around 100 million shillings saved. So he used this money to start Europa Bank in 1993. The bank was known as a conduit for money laundering. It was just a copy-paste of Trade Bank. It had political connections through which kept the bank open. Although soft-spoken, Mudhamia was now older and a shrewd businessman. And using his elaborate network of contacts in high places, he was able to get all major parastatals in Kenya to bank with his bank. Remember, at that time, the government had National Bank. But instead of the government parastatals taking their money to National Bank, they were taking their money to Mudhamia at Europa Bank. He promised them high interest rates after short periods. But after 10 years of looting, the bank would start facing liquidity problems. It was then that Francis Atwoli raised the alarm. The directors of the bank fled, the parastatal heads were questioned, but as you have guessed, the parastatals lost a combined 1.8 billion shillings to Mudhamia and his associates. Here are some of the parastatals that lost money. NSSF lost 256 million shillings. The Kenya National Hospital lost 421 million, with the biggest casualty being the National Hospital Insurance Fund, NHIF, which lost 479 million shillings. This is what happens when politicians use banks as their purse. Number 3, Imperial Bank. Imperial Bank opened its doors in 1993. It had a prominent purple crown sitting on the bank's name like, a crown on a monarch. It told the story of the young bank and its ambitious founder, Abdulmalek Jan Mohammed. But Jan Mohammed's ambition was more evil than good, because by the time the bank was placed under receivership in October 2015, investors and depositors had lost 39 billion shillings. Abdul Malek, who was the owner, he owned about 12.5% of the bank, but he had controlling power over everything that was going on in the bank. He started stealing from the bank using fake accounts. This was a simple but elaborate trick. Have multiple accounts opened on behalf of a fictitious company. The accounts were for savings and loans. Once amounts were transferred into these accounts, he would redirect the money to other accounts offshore and to acquire properties, etc. The accounts would move up to 70 million shillings per day. But what we do not know from that statement is that these accounts were actually for hire. He hired these accounts to corrupt politicians who had money to hide, to drug lords who had billions of money that could not go through the normal banking channels, to, sex traffickers around the world that wanted such kind of services. And therefore, the whole process was dark from the word go. Ordinarily, in a legitimate bank, such a scheme would be impossible to pull off. For instance, every bank has a policy of know your customer, meaning that every account that is opened has to have a face and an address behind it. Second, internal auditors would flag such a transaction immediately. For instance, in Imperial Bank, some accounts had loans that were 20 times more than what were deposited in those accounts. And also, external auditors would immediately notice the holes in the books and would notify the CBK, who are the regulators of banks, and an action would be immediate. But Jan Malek Mohammed had all this covered. He prepared 3 sets of accounts. One for his own look, because he had to know what is happening in his bank. The other set was for the board of directors, which were cooked accounts. And the third set were for the CBK, Central Bank, which again were cooked accounts. But also his internal auditors, his external auditors, and some of the CBK officials were in his payroll. He knew that everyone had a price. Over the course of many years, and unbeknown to the bank's board of directors, CBK officials deliberately floated, breached, and otherwise acted in disregard of the law in relation to the supervisory process of Imperial Bank. And that's how Imperial Bank collapsed with 39 billion of our deposits. Number 2, the Exchange Bank Limited. I'm sure most of you have not heard of the Exchange Bank, but I'm sure you've all heard of Kamlesh Patni. In 1992, Kenya had one of the biggest scandals of its entire existence, the Goldenberg scandal. Goldenberg was the brainchild of Kamlesh Patni. But before it exploded in 1992, the scheme had started back in 1991. In 1991, in Kamlesh Patni's word, he had gone to a shop to buy a suit, and that's where he met the Director of Intelligence, one James Kanyotu. Kanyotu in Kikuyu means thirsty. He was probably thirsty for money. And together they came up with this elaborate plan to form a gold exporting company called Goldenberg. But because they would be handling a lot of money, that is when they proposed to form a second company to handle their money, which was to be a bank. So Kanyotu and Patni formed the Exchange Bank Limited, which was proposed for application to Treasury on the following day after they met. That was even before it was incorporated as a company. 6 days later, the approval was accepted by the Treasury for it to be a bank, and 2 months later, in October 18, 1991, the company was formed with a nominal capital of 2,000 shillings made of 2 shares, one taken by Patni and the other by James Kanyotu. So this is what happened. Patni, as you know, used fake export claims to export that he was exporting goods to Kenya, and he got a compensation of 35% for every dollar that he exchanged back to Kenya. But what he actually did was that he would borrow money from other banks or from other people, deposit it in his bank, the Exchange Bank, and claim that those were proceeds from exporting gold. But in any case, it was just money that was lying in the accounts. And then he would get compensation of 35% for every dollar. That's how he made his money. Then he used the proceeds of the scam to acquire the Grand Regency Hotel and the Pan-African Bank. As at that date, he had already received 5.8 billion shillings directly from CBK. And as soon as his scheme was discovered, and the export compensation and pre-export credit services were discontinued, Patni would bounce back again like an evil genius with an even deadlier plan up his sleeves. Patni would now use his new bank, Pan-African, for check kiting. This caused some of the banks during that day, including Postbank, to fall because of debt, because he stole close to another 10 billion shillings using those banks. And now for number 1, Charterhouse Bank. To understand Charterhouse Bank, I'll give you a small lesson in history. Magnal Shah started a retail business in Nakuru, and his sons Atul Kumar Shah and N.M. Shah grew the Nakumatt Empire. So the Shah brothers grew the Nakumatt Empire. And then there was also another set of Shah brothers called Aramin Kalb Shah, who started the Kingsway Tires, and the brothers also grew the empire. So the Shah brothers were friends. The two sets of brothers had successful businesses in the early 90s. They were conducting business on the street on Nehru Park, correct accounting, paying the right taxes, and reinvesting in themselves and in their businesses. However, for both sets of brothers, that path was too slow for their ambitions. Among the things that they discussed when they met was how to hide the real records, including cash turnover, from the roving eye of the taxman, and how to hide their ownership through a complicated layering of companies. So sharp were the Sharp brothers that they were able to come up with a single solution for both problems. They agreed to co-own a bank. That is when, in 1996, they bought a financial institution named Middle East Bank, and they later renamed it to Charterhouse Bank, and they agreed to operate it like their personal kiosk. So for the next 6 years, from 1998 to 2004, the Atul Shah-led Nakumatt grew to unprecedented heights. Every new mall that was constructed had to have Nakumatt at its anchor tenant. Malls like the Junction, Westgate, High Ridge were all known because of the giant supermarket. Charterhouse Bank was also growing, and for convenience, the bank was housed within the Nakumatt supermarkets. Peculiarly though, for the 6 years, Nakumatt audited financial statements never reported a profit. It was making losses year in, year out. Nakumatt was engaging in tax evasion and money laundering using Charterhouse Bank. The bank had hundreds of fake accounts that had no faces, and once Nakumatt made sales and collected cash from its branches, the proceeds would be banked into these fake accounts. These fake accounts would never make it to the real financial statements of Nakumatt, making it possible to declare low sales and low cash turnover by banking a small amount in the normal bank accounts. An investigation by PricewaterhouseCoopers, after an internal auditor blew the whistle about Charterhouse Bank, revealed, among other things, unregistered accounts being used by Nakumatt and Tuskys as well as other companies to move large amounts of money under unclear instructions, and irregularities in the accounts to and from where the payments were being made. Apart from helping local businesses evade tax, Charterhouse Bank also provided global crooks with accounts for hire in order to launder cash. So all the drug traffickers, all the corrupt politicians from Kenya and across the borders who had money to hide used Charterhouse Bank to launder their cash. And when Charterhouse Bank collapsed, it was imminent that the businesses that so much depended on it for growth and for cheap cash would also collapse. And that's how Nakumatt and Tuskys followed suit. So now you've seen the top 5 bank scandals in Kenya. Note that there are others that have not made the list. Leave your comments on what else we should cover. And if you liked this episode, please subscribe. My name is Jeff Kafka, and until the next episode, take care.